Welcome to the deep dive. Today, we're jumping straight into the latest Vantage Plus crypto outlook.
Yep. Our mission is to cut through the noise for you.
And the big finding right at the top is this sort of conflict. The recent crypto rally has just completely stalled out.
It's lost all that positive momentum.
Right. And it's happening even while the stock market is actually showing some pretty positive signs.
Which is fascinating, because crypto is decoupling, but it's kind of decoupling in the wrong direction.
So what's behind that?
Well, the outlook points to two really specific external factors that are weakening the general risk sentiment.
Okay.
First, there was the U.S. non-farm payroll data, the NFP, that came out last Friday. That definitely caused some unease.
And second.
The second was the U.S. Supreme Court. They didn't deliver a ruling that would have deemed U.S. tariffs illegal.
Ah, so that creates more uncertainty.
Exactly. Continued global trade uncertainty. And that's something high-risk investors, they just run from immediately.
And that stock market carryover we were talking about, it's basically gone.
Completely gone. The report's pretty clear that investors are shifting their focus a bit.
Away from what?
Away from both AI and crypto-related stocks. So that whole innovation sector is feeling the chill.
That feels like a pretty significant red flag, doesn't it? If the money's flowing out of innovation itself.
It is. If we connect this to the bigger picture, the only long-term factor that could offer some support is, well, the hope of more rate cuts from the Fed.
Right, the classic Fed pivot narrative.
Yeah, which would weaken the dollar and, in theory, support these markets.
But we've been hearing that for months. If Fed cuts are the only thing holding this up, isn't that a little concerning for the asset class itself?
It's a fair question.
Let's see if the charts reflect that fragility. Let's dig into the technical, starting with Bitcoin. It's trading around $90,733.
Okay, so the key insight for BTC is that its momentum just stalled out right before that critical resistance level. It failed to break through.
But it hasn't crashed.
No, and what's positive is that it is still holding above its 50 moving average zone. You can think of that 50 MA as like a boat's waterline.
Okay.
As long as it's above it, the market isn't sinking. It's just stalled.
So if the waterline is holding, what's the launch pad? What's the number we need to see?
The report is very specific here. A break of the $94,200 zone. That's what's needed to unleash fresh momentum to the upside.
But with no macro drivers, that feels a bit ambitious short term.
It definitely needs a catalyst. Now, the story's a little different for Ethereum, which is at $3,099.
Similar story, though. Fading sentiment.
Very similar. It needs a clear break of $3,200 for any real upward move.
And the downside risk.
That's the important question. If ETH trades below that big psychological level of $3,000, that positive sentiment is really expected to just evaporate.
And that could trigger a bigger slide.
It could. Potentially down towards the $2,300 area. A move like that would, psychologically wipe out months of gains for a lot of people.
Okay, let's jump to Ripple, XRP. Trading at $2.09.
That one has definitely run out of gas.
The chart's not looking great.
No. The weekly chart is flashing a big negative signal, a pin bar candlestick. It shows sellers really dominated at the end of the week.
So where's the floor?
Well, it's holding just above that $2 psychological support. But the real concern is a deeper support zone on the monthly chart, around 1.85.
And if that breaks?
A break there could open the door to a much, much steeper decline.
Okay, let's finish with Solana, SOL, at 136.35.
So SOL is actually showing the most resilience of the bunch.
Really? How so?
It's still trading pretty strongly above its 50 moving average.
And what's the upside target to watch?
The next key level is $140. A clean break above that could signal fresh momentum and maybe even a push toward the next major resistance at 175.
Okay, so let's try and wrap this all up.
To synthesize all of this for you, you have these key moving averages that are generally holding, right?
Yeah.
Which means big players haven't completely bailed. But the failure to break those key resistance levels, 94,200 for BTC, 3,200 for ETH, that's what's causing the stagnation. The market is just stuck.
In a holding pattern.
Exactly. It's waiting for some kind of trigger, either fundamental or technical.
So here's the final thought. Given that the report notes this general shift away from both crypto and AI stocks, is this holding pattern we're seeing just a reflection of real underlying weakness? Or is it maybe just a brief consolidation before a bigger push, especially if that whole dollar weakening story finally comes true?
That's the million-dollar question.
Something for you to mull over until our next deep dive.